If you have ever found yourself staring at your bank account balance a few days before payday, feeling that sudden pit of anxiety in your stomach because an unexpected bill just landed, you are definitely not alone. Millions of people face this exact cash crunch every month. When you need $50, $100, or $200 to bridge the gap until your next paycheck, traditional options can feel terrifying. Payday loans charge astronomical interest rates. Bank overdraft fees can easily cost you $35 for a simple coffee purchase, and credit cards might not be an option if you are trying to rebuild your credit or avoid mounting debt. This fear of short-term cash shortfalls is precisely why fintech apps have exploded in popularity, and one platform getting a lot of attention is Grid Money. So, what exactly is Grid Money? How does its cash advance feature work, and is it genuinely a smart financial tool or just another subtle debt trap wrapped in a slick smartphone interface? To evaluate Grid Money objectively, we need to look under the hood at its core mechanics, fees, and real-world trade-offs. Grid Money is a personal finance app designed primarily to give users access to short-term cash advances without performing a traditional credit check. When you sign up and link your primary checking account, the app evaluates your banking history, deposit frequency, and cash flow rather than pulling your FICO score. If approved, Grid allows you to take out a cash advance, typically ranging from $20 up to $200 or more as you establish a consistent repayment track record with them. On the surface, the appeal is obvious. You do not need good credit to qualify. There is zero interest charged on the advance itself, and there are no late fees if your payment is slightly delayed. For anyone terrified of dinging their credit score or falling victim to predatory 300% interest rates from a local payday lender, an app like Grid feels like a safe, modern lifesaver. However, understanding financial tools requires looking closely at the total cost structure. While Grid advertises 0% interest, it is not entirely free. To access features like cash advances, Grid charges a monthly subscription fee, which typically hovers around $10 per month. On top of that, if you need the money transferred to your bank account instantly rather than waiting 3 to 4 business days for a standard transfer, you will pay an additional express delivery fee. Here is where the financial math becomes critical to understand. If you borrow $50 and pay a $10 monthly membership fee plus a $3 instant transfer fee, you are paying $13 total to borrow $50 for a couple of weeks. When you convert that fee into an annual percentage rate, or APR, the effective cost is actually quite high, far higher than a standard credit card. This brings up an essential question every user must ask. Are you paying for convenience, or are you unintentionally overpaying for short-term liquidity? Beyond basic cash advances, Grid offers a unique feature called Pay Boost, which aims to optimize your paycheck tax withholdings so you keep more money in your paycheck each pay period rather than waiting for a tax refund at the end of the year. While increasing take-home pay sounds great, users must be cautious. Miscalculating tax withholdings can result in owing money to the IRS when tax season arrives, so relying solely on an automated algorithm for tax strategy carries inherent risks. The biggest hidden danger with cash advance apps like Grid isn't necessarily the app itself, but the psychological cycle it can create. When your advance is automatically deducted from your checking account on your next payday, your upcoming paycheck immediately becomes smaller. If your budget is already tight, starting the next pay cycle down by $100 or $200 often forces you to take out another cash advance just to cover basic living expenses. This creates a recurring treadmill of borrowing where you pay monthly subscription fees repeatedly just to spend your own future income in advance. So, what is the actionable takeaway here? If you choose to use Grid Money, treat it strictly as an emergency bridge, not a permanent budgeting strategy. If you need quick cash to avoid a costly bank overdraft fee or a shut-off notice, using a cash advance app one time can make economic sense because a $10 fee is cheaper than a $35 overdraft charge. However, if you find yourself requesting an advance every single month, it is a clear warning sign that your underlying budget needs adjustment. To break the cash advance loop, focus on 3 concrete steps. First, audit your recurring monthly subscriptions and temporarily cut non-essential spending. Second, Aim to build a micro-emergency fund of just $300 to $500 in a separate high-yield savings account. Having even a small cushion completely eliminates the need for short-term advance apps. Third, if you frequently run short before payday, consider discussing a timing adjustment for major bills with your service providers to better align due dates with your income schedule. Use sparingly. Apps like Grid can keep you afloat during a tight spot, but mastering your baseline cash flow is what ultimately builds long-term financial freedom.